So, if you haven't been looking at mortgage-backed securities, you should. This is telltale sign of what's coming. So, mortgage-backed securities starting September 12th started falling faster. Why is that? Pretty simple. Fed stopped buying mortgage-backed security on September 14th, and ever since, mortgage-backed securities have been falling. So we went from like 98, 97, all the way down to 95.16 today for a 30-year 5% coupon UMBS, and we are looking at 7.37 mortgage rates for a 30-year fixed rate, and you can expect a lot more in the coming month as the Fed is going to raise interest rates by 150 basis points in November. They have two meetings, one in the beginning and one late November. So we're expecting 150 basis points that month. So we're going to get to probably the high 8s, low 9% for a 30-year fixed rate mortgage. And it's not going to get any better anytime soon. So if you're planning on buying a home, I say wait. Home prices are continuing to fall, and they will continue to fall as there is no support for mortgage-backed securities. Fed has no choice but to keep on raising rates, and don't expect a pivot anytime soon. As long as core CPI is still rising, we're not going to see any relief. It's just plain. We are starting to see some breakdowns. We saw UK bonds having some issues. T-bills are having some issues. You got Swiss National Bank doing currency swaps. That's never a good sign. Those usually never happen. And when you start seeing banks go to the central bank in Switzerland asking for dollars, that's not a good sign. So expect dollar to go back up even higher. And we might see a financial crisis soon. So if you're thinking of buying a home, my recommendation still stands not to buy right now. Home prices are still going down. They will continue to go down. And officially, as of this month, if you look at home prices year over year, they're technically down if you adjust them to inflation. Yes, Case-Shiller Home Price Index adjusted for inflation is down year over year. So people don't expect the 2008 financial crisis and home crisis. Put your hat on. We have a very, very good probability of living 2008 again. The probabilities are rising every single day as long as inflation is high. The Fed keeps on hiking rates, and we're seeing, like I said in my previous video, flippers getting in trouble. Home builders are dumping inventory as quick as they can. They're abandoning sites. You have investment companies dumping homes. Zillow, iBuyer, Open Door. They're selling homes for thousands of dollars less than they bought them because they know what's coming. And then sooner or later, you're going to have pension funds that invested heavily in the commercial and also single-family home market by buying up rates and certain companies for rentals and even directly buying single-family homes. They're going to start having some liquidity issues with their pension funds as bond asset prices keep on falling. So, get ready. We're going to see some great deals coming up. So if you're a buyer, my recommendation, pause, wait. Interest rates will go up, but home prices will continue to go down.